Welcome to the deep dive. We are opening up a really fascinating stack of research and market analysis today.
Yeah, there's a lot to get through.
There really is. And our mission today is pretty straightforward. We're exploring a company called Kreneon and unpacking exactly why their, very specific approach to the global water crisis is uniquely positioned to attract massive private investment.
Right, which is something we desperately need.
Exactly. Because if you've been watching the growing alarm over water scarcity, we usually think of it as like a problem for scientists to solve.
Yeah, a physical problem.
Right. We picture engineers in hard hats building these massive desalination plants, or, I don't know, chemists inventing microscopic next generation filtration membranes. We expect a physical fix.
It is the natural default, for sure. I mean, we assume humanity just needs to invent a better technological straw, essentially, to pull more water from the earth or the ocean.
But looking through the source material on Kreneon, they are looking at the exact same physical crisis and arguing something completely counterintuitive.
Yeah, they really flipped the script.
They do. Their core thesis is that structurally solving global water scarcity is, well, it's actually not a technological problem at all. Fundamentally, they argue, it is a capital problem.
And to understand why they say that, you really have to look at the jarring scale of the numbers driving this market. Let's ground this right away for the listener.
Yeah, lay out the stats.
Okay, so by the year 2030, which, by the way, is practically tomorrow in terms of global infrastructure planning, the world is projected to face a 40% deficit in clean water.
Wait, a 40% deficit?
Yeah.
That means nearly half of the world's required supply simply won't be there.
Exactly. And the humanitarian implications of that are terrifying, obviously, but the economic reality is equally stark. Currently, 60% of the global GDP depends directly on clean water.
Wow.
We are talking about a staggering $58 trillion. That encompasses everything from, semiconductor manufacturing and heavy agriculture to...
To keeping the servers at giant cloud data centers from melting down.
Exactly. And because of this looming 40% deficit, there's an estimated $13.2 trillion infrastructure gap that needs to be filled just to secure that water supply.
Okay, let's unpack this. If there is a $13.2 trillion hole, and like $58 trillion of global economic output depends on filling it, the obvious question is, why aren't massive private investment funds just rushing in to build the infrastructure?
Right. Where is the money?
Yeah, where's the money?
Well, that is the exact question Kreneon is answering. And the disparity is wild when you look at the broader green infrastructure space. Right now, private capital funds about 75% of clean energy projects around the world.
Okay.
Solar arrays, wind farms, geothermal institutional private money is aggressively financing those. But when you look at water infrastructure projects, private capital only funds a dismal 15%.
So 75% for energy, but only 15% for water. Let me push back here a little bit. We do have water markets, right? Like, for instance, in places like California. But they are historically plagued by intense regulatory red tape, local politics, and price manipulation.
Oh, absolutely.
So why would a massive pension fund or private equity group want to touch that kind of headache?
Well, they don't. And that's the core issue holding the capital back.
Mm.
Water currently lacks transparent pricing on standardized financial instruments.
Okay.
In the world of institutional capital, uncertainty is the ultimate enemy. If a pension fund is going to drop, say, $1 billion to build a state-of-the-art water recycling facility, they need absolute certainty on their return on investment.
Which they can't get right now.
Right. Because right now, you cannot easily track, verify, and trade the water that a plant produces on an open, standardized market. Without knowing the exact financial return, institutional capital simply cannot and will not move. It's essentially frozen.
Got it. So Kreneon's goal isn't to build the water treatment plants themselves.
No, not at all.
Their goal is to build the missing financial layer, like the underlying market architecture that thaws out that frozen capital and gets it flowing to the people who do build the plants.
Yes. They're building a protocol designed to turn water into a trackable, tradable commodity, establishing total certainty for the market. And they are doing it through a very logical progression, like a 5-step protocol.
Walk us through that. How do they actually do it?
Well, before you can sell something to Wall Street, you have to prove it actually exists, right?
Naturally.
So they start with the source. Step 1. They install specialized hardware and software sensors directly onto water creation devices, say an atmospheric water generator, or an industrial recycling system.
So nobody with a clipboard is just manually typing into a spreadsheet how many thousands of liters they produce that day.
No, definitely not.
Because that introduces human error, or worse, fraud.
Precisely. Kreneon establishes what they call device truth. These sensors use cryptography to securely record the volume of water produced, the quality, and the compliance data right at the origin.
Oh.
Yeah, by using cryptographic hashing, the data becomes an unalterable third-party record. It proves, without a doubt, that a specific liter of water was manufactured at a specific time and place.
Okay, so you have the truth at the source coming straight from the pipe. But, I mean, raw cryptographically secure data is just ones and zeros. I imagine the next step is putting that somewhere usable.
Exactly. Step 2 is verification. All that secure data flows from the edge devices into an enterprise registry database.
Okay.
Think of this as the ultimate, highly secure global vault that houses the production data and metadata for all this newly manufactured water.
But you're entirely right. Raw data in a vault doesn't give a Wall Street trader something they can buy and sell.
Right. A trader expects a ticker symbol. They expect standardization.
Yeah.
Like if I'm buying a barrel of oil, I don't care which specific well it came from. I just know what a barrel of West Texas Intermediate is. Which is why step 3 of the protocol has an infrastructure layer that refactors that raw registry data into distinct standardized units. Kreneon calls them standard water lots, or SWLs.
Okay, so essentially they are putting a highly secure digital fingerprint on every liter of water produced, boxing it up into a standard unit, and putting a barcode on it so it can be traded on a market.
What's fascinating here is that Kreneon is simply synthesizing mature, industry-proven mechanisms like remote telemetry and standard contract structures, and applying them to water for the very first time.
That makes a lot of sense.
Yeah, they're explicitly building this technology so that the tradable unit can mature into a regulated asset, completely suitable for any global commodity exchange. Which brings us to step 4, the asset layer.
The actual trading platform.
Right. The platform converts those SWLs into water purchase agreements, or WPAs. In this format, they can be minted, traded, and retired using regular fiat currency.
And by fiat currency, we mean everyday money, US dollars, British pounds, euros.
Exactly.
So an investor in London can buy the rights to a verified standard water lot produced by a desalination plant in California, and they can do it in pounds or dollars as easily as they would buy a share of a tech company.
Providing the liquidity and price discovery that simply hasn't existed for water before.
You mentioned a fifth step, though.
Yeah. Step 5 is data. To tie a bow on risk management, Kreneon is building an analytics engine that fuses all this incredibly rich water source data with broader weather hydrology data sets.
Wait, how does knowing the hydrology data actually help? Like, I get why a farmer cares about weather, but why does a financial trader care?
It's vital for underwriting. If an insurance company is going to underwrite a policy on a water production facility, they need to model the risk.
Oh, I see.
By fusing the plant's production data with local aquifer depletion rates and predictive weather models, the insurer can accurately price the risk of that plant's operations. Accurate risk pricing attracts more conservative capital.
So they aren't trying to build some rogue, unregulated crypto market for water. They want this sitting on the traditional commodity exchanges. But I want to dig into the incentive structure here, because having a verified barcode on a liter of water makes it a neat financial product, sure. But we really need to explain to the listener why this specific model suddenly makes those hesitant private investors eager to open their wallets.
It all comes down to a domino effect triggered by one thing: price transparency.
Right.
When you turn water into a standardized asset, you suddenly establish a clear, transparent price for it. That is the first domino. Currently, the price of water is incredibly opaque.
Yeah, it's heavily subsidized by governments. It varies wildly by municipality.
And the true cost is often hidden in taxes, yeah.
But once you have an open market trading standard water lots, the true market price becomes visible to everyone instantly.
And here's the second domino. Price transparency allows a water project to become insurable. If an insurance company knows exactly what the product is worth on the open market, they can confidently write a policy to protect the facility that manufactures it.
Which is standard practice for any major infrastructure. You can't build a billion-dollar solar farm without ensuring the revenue it is projected to generate.
Right. And that leads to the third and biggest domino.
Yeah.
Once a project is insurable, it finally becomes bankable for large financial institutions.
The risk profile drops.
Dramatically. The sources we're analyzing highlight the specific math on this. This newfound bankability lowers the cost of capital by 200 to 300 basis points.
So what does this all mean? Let's translate those basis points. We are talking about a 2 to 3 percentage point drop in the interest rate on the massive loans needed to build these plants.
That is a colossal reduction in debt servicing costs for a $500 million infrastructure project. When you drop the cost of capital by that much, price clarity unleashes capital.
Yeah, so just by making the price of water clear and transparent, the risk drops so much that it actually triggers more investment?
Yes, the data suggests this dynamic triggers a massive 6 to 10 times investment surge into the sector.
6 to 10 times.
Because suddenly, the math works for the big pension funds. They can invest $500 million to build a water reuse plant, knowing they have a guaranteed insured return because the output is already pre-sold or hedged on the Kreneon exchange.
Okay, I want to stop and look at a really profound paradox in this research. If you just hear the phrase, Wall Street is commodifying water, the immediate assumption is dystopian.
Oh, absolutely.
You assume traders are extracting profit, which means the price of water for the end consumer, the farmer, the local municipality, is going to skyrocket. But the research shows the exact opposite.
It is a brilliant paradox. Because of this massive scale of new investment, and crucially, because of that lower cost of borrowing money we just talked about, the end user costs actually drop.
Really?
Think about it. If a facility owner is paying millions of dollars less in interest to the bank every year, their overhead is lower. They can sell the manufactured water for less money and still achieve their required profit margin.
Because their debt is so much cheaper.
Exactly. The data projects that end-user costs actually drop by an equivalent 200 basis points.
So financializing the resource actually makes it cheaper to produce at scale. Wall Street making money off the infrastructure actually lowers the water bill for the end user.
If we look at history, this makes perfect sense. Kreneon is essentially running an energy playbook, but applying it to water. Consider the year 1990 with natural gas.
Okay, what happened in 1990?
Well, before 1990, a lot of natural gas was viewed as a volatile, localized waste material. It was literally flared off, like burned away into the atmosphere at oil rigs because there was no reliable market for it.
It was too unpredictable to transport or price accurately.
And the Henry Hub Standard Contract was introduced in Louisiana. It created a standardized physical nexus and a uniform contract for natural gas.
Just like the WTI and Brent benchmarks unlocked global oil transport in 1983.
Precisely. Almost overnight, Henry Hub turned a localized waste product into a predictable, bankable financial asset. Because the market could finally price it and trade it, massive investments in pipelines and liquid natural gas terminals followed.
Wow.
Today, liquefied natural gas is a $100 billion market. Kreneon is laying the exact same groundwork for manufactured water.
And just to clarify for everyone listening, when we say manufactured water, we are talking about water created through human intervention.
Yes.
Desalination, industrial wastewater reuse, and atmospheric water generation that pulls moisture right out of the air. Net new water being added to the usable system.
That is a vital distinction. They aren't privatizing existing municipal reservoirs. They are enabling the financing of net new water production.
Okay, so the investor appeal is undeniable. We've established how the market builds confidence, how the capital starts flowing, and how the infrastructure gets built. Now let's look at Kreneon itself.
Sure.
How do they actually operate as a business within this massive new ecosystem they are trying to spawn?
Their business model is quite strategic because it completely avoids the trap of taking on massive physical infrastructure debt. They aren't buying land or pouring concrete.
Right.
They have 4 main revenue streams. The first is registry fees. This operates on a software as a service, or a SaaS model. The water producers pay a yearly subscription fee to list their verified water on the Kreneon network and utilize the protocol's infrastructure.
Very similar to a real estate agent paying a listing fee to put a house on the multiple listing service. You pay for access to the eyes of the market.
Yeah, exactly. Second, they collect trading fees. This is a very small, low-cost fee between 5 and 75 basis points levied on every single trade across the platform. This fee covers the continuous updating of ownership records, keeping the registry perfectly accurate in real time.
It might just be fractions of a penny on the transaction, but when you are facilitating the trading of billions of liters of water daily, those fractions become an avalanche of revenue.
Oh, huge revenue. Third are contract success fees. Because Kreneon acts as the central hub, they essentially serve as a matchmaker. They connect massive buyers who desperately need water with independent producers manufacturing it.
Okay.
Whenever they successfully close a new long-term procurement deal between two parties, they take a structural commission of 2 to 5%.
So if they aren't charging a massive toll on the physical water itself, they must be monetizing the intelligence gathered from all this global activity.
You nailed it. That brings us to the fourth stream, which is data sales. By operating this protocol, Kreneon is going to possess the most accurate, real-time data set of global water production and movement in human history.
That is wild to think about.
They will package and sell access to this market and production data to institutions for forecasting, supply chain analytics, and corporate sustainability reporting.
Here's where it gets really interesting. If you are trying to understand the sheer scale of this company's ambition, Kreneon is looking at a total addressable market of $159 billion just for this net new water segment.
Massive.
But by avoiding the heavy lifting of building the water machines, they are positioning themselves as the infrastructure layer that everyone else relies on. It's very much an Intel inside strategy.
It's an apt analogy. You don't need to build the computer if you own the microchip that makes every computer function.
Right. If you own the hardware protocol that extracts the data, the secure registry that verifies it, and the financial market that settles the trade, you create massive network effects. Every new water plant that plugs into Kreneon makes their network more valuable.
And the switching costs to leave that ecosystem to try and prove to Wall Street that your water is real somewhere else become impossibly high.
Right. But how far along are they? Is this just theoretical whiteboard math?
No, we know this isn't just theoretical because of the traction they already have in the market. Kreneon has a significant head start. They already have 5 executed letters of intent with significant players in the water generation space.
Oh, wow. Like who?
Companies like AirBuild, Tsunami Products, and Revive Environmental. These aren't just ideas on paper. These agreements represent over 60 existing or planned locations globally where Kreneon's protocol will be actively deployed.
That's real traction. But securing the supply side is only half the battle. You cannot just invent a global financial market for a critical resource in a vacuum.
No, you definitely can't.
Governments and regulators tend to intervene heavily when essential resources are being traded.
Which is precisely why Kreneon is engaging with governments directly rather than trying to skirt them. They have preliminary pathways open with Canada, the United Arab Emirates, and crucially, the United Kingdom.
Really? The UK?
Yeah, they're actively utilizing the UK's Financial Conduct Authority, the FCA, which is their primary regulatory framework. Kreneon is partnering with market participants inside that framework to actively define the rules for global water trading.
That is smart. They aren't adopting the old Silicon Valley mantra of move fast and break things, asking for forgiveness later. They are walking right through the front door of the regulators and offering to write the rulebook together.
And when you look at the core team executing this vision, you understand why they have the credibility to sit at that table.
Who is behind this?
The CTO and co-founder, Stan Hanks, is a 20-time founder who literally built the world's first broadband commodity trading markets.
Oh, wow. Okay.
Yeah, he knows intimately how to engineer high-integrity, production-grade telemetry and financial trading systems.
So he has architected this exact kind of complex systemic market making before, just in a different sector.
Exactly. Then you have the CEO, Michael Olwelling. He's a former Hewlett-Packard leader with a track record of scaling businesses into multi-billion-dollar global brands. He grew HP's all-in-one business by $1.1 billion alone.
That is some serious operational experience.
And heading up their ecosystem development is Melissa Ivers, a former Intel vice president who knows exactly how to build global networks using open source standards and, incentivize developer communities to adopt a single standard.
So you have a team that knows how to build the market plumbing, a team that knows how to scale a global enterprise, and a team that knows how to make their standard the industry default.
Yes. They are staring down a $13.2 trillion void and building the only bridge that allows institutional capital to cross over and solve it.
That is incredible. So, bringing it all home for you listening today, we started this deep dive by challenging the deeply ingrained assumption that the global water crisis just needs better engineering or a finer filter.
Right.
What we've learned from unpacking Kreneon is that solving water scarcity at scale is about financial engineering. By taking a vital, messy physical resource and turning it into a verified, standard commodity with a transparent price tag, Kreneon is doing something revolutionary.
They really are.
They are systematically lowering the risk for private investors, and in doing so, unlocking the trillions of dollars of sidelined capital desperately needed to build a resilient water future for the planet.
I will leave you with a final thought to mull over, something that isn't explicitly mapped out in their standard business model, but is a natural, inevitable consequence of this protocol succeeding.
Oh, I like where this is going.
Think about the geopolitics of the last century. Global power was largely defined by who had the oil beneath their feet, who could pump it, refine it, and sell it on the open market. We call them the petrostates.
Right, the entire 20th century turned on that dynamic.
Now imagine a world a decade from now where Kreneon succeeds. Water is now a globally traded, highly liquid commodity, just like crude oil or natural gas. If that happens, how will that fundamentally shift the geopolitical power of nations, countries, or even private corporations with massive technological capacities to manufacture net new water through vast coastal desalination arrays or fields of atmospheric generators could suddenly find themselves as the new energy titans of the 21st century?
Wow.
We could see the rise of hydrostates. The wealth and power of nations could be built on the very exchanges Kreneon is designing today.
From petrostates to hydrostates, all unlocked because we've finally figured out how to put a verifiable barcode on a liter of water. That is a massive paradigm shift. Thank you for joining us on this journey today. Keep questioning how the invisible financial mechanisms ticking away in the background shape the very real physical world around you. We'll catch you on the next deep dive.